afternoon, everyone, and welcome to Stock Market Today for Monday, February 9th. It's Alexis Garcia here, and the S&P 500 and NASDAQ popped today while the Dow tried to hold the 50,000 mark this Monday. This after a volatile trading climate last week. And for investors, it's yet again another busy schedule of earnings and economic data this week. So, here with me to help break down everything you need to know about today's trading action is IBD Deputy Markets Editor David Saito-Chung. Dave, it's great to see you. I hope
Thank
everyone had
you.
a great Super Bowl week. I don't know, maybe you won some money. I don't know. I certainly didn't.
Yeah, I don't bet on the Super Bowl, therefore I don't shed any tears whoever wins or loses. But it was fun, and so was the halftime show. It was very memorable. I'm glad you had a good time enjoying it.
Yeah, it was great to get together with friends and family. So hope all of you out there had a great weekend as well. But what do you have on tap for us today? Another, it seems like the market's also gearing up to have possibly a great week as well.
Well, believe it or not, I actually wanted to link one of the names that we're going to talk about to the amazing defense that Seattle Seahawks played. Congratulations to them, by the way. And so we'll talk about AEIS. This is Advanced Energy Industries. They've got earnings coming up. We'll also talk about an aerospace play, HEI, that's Heico, and then top it off with a stock that really surprised me how strong it was today, UI, which is Ubiquiti.
All right, well, we will get to those names. Let's just quickly round up the major indexes. The S&P 500 finishing the day up almost 0.5%. The Dow also looks like it finished the day up fractionally. The Nasdaq up at 0.9%, and small caps up about 0.7%. Dave, so I'm going to go ahead and get our chart going here. I'm on SPY, and we can
Oh, good.
see, on Thursday and Friday dipped below that 50-day line, but it has since rebounded here, Dave, and again back
Yeah,
almost up to record highs. So it's been a little bit of a roller coaster here for investors.
I think you're right. I mean, you look at the action over the past 2.5 months, and we've been dipping below or near that red moving average, the 50-day line, many times, and yet the S&P has shown enough strength to make some new highs and keep its positive mojo so far for 2026. And it's reflective of some strength in areas outside tech, which has been so strong, as we know, for a couple of years. And so therefore, you know, we are keeping a close eye on the small caps with IWM, as you highlighted. That one is not at an all-time high yet, but boy, it's the highest close, or one of the highest closes in January, right? And I always like to think of the IWM, as well as, if you don't mind typing in 0S ampersand P6. This is the small cap 600. There you go. Uh, this actually had hit an all-time high on Friday, and then we should see that, and we see that strength in today's action as well. So this is an indication that the economy is still healthy. Earnings are rolling along, and those are two very important factors for equity returns. And interest rates are pretty stable. So far, I'm liking what we're seeing in the market. And then let's go over to oh yeah, there you go. There's a 10-year treasury. We didn't really plan to talk about it because it really didn't move much, right? But it is still, when you look at that chart, this is a very important chart. And I'm glad you brought this up, Lexi, because you go back to January 2025, you can see 4.80. You take that number, those marked highs and marked lows, divide that by 10, and you'll get that benchmark yield for the 10-year treasury. 4.80%, yeah. We are much below that, which reflects a very supportive interest rate environment, supportive monetary policy for stocks. Now let's go also to 0NYC. This is the New York Stock Exchange version of the Nasdaq, and look at that relative strength. Look at those new highs. Uh,
Yeah,
this
great.
this yeah, if there's anything that should, put to rest any doubts that you can go long in the market, I think this is a good indicator that New York Stock Exchange Composite has been riding along its green line, that 21-day exponential moving average for at least 2.5 months or so. So very impressive action there. And therefore, maybe keep a close eye on what pops up on your watch list and see how many stocks are coming from the New York Stock Exchange and how many are coming from the NASDAQ. You actually might be seeing more of a balance between the two.
Yeah, and just looking at the Nasdaq again, another positive day here, inching closer to these conjoined 21 and 50-day lines. But this one has been kind of lagging a bit here, Dave. So thoughts here?
Yeah. Yeah, I think it's still basically range bound in terms of NASDAQ stocks. One stock I own, NVIDIA, NVDA, we talk about it a lot on IBD Live. I hosted the show today. We decided to add a small position, quarter size position on the leaderboard model stock portfolio today. And it finished a point below the leaderboard entry. But here is a good example of how the NASDAQ reflects some sideways movement among some really great companies that have had some really nice long price runs. It could be a while before some of these stocks really break out and then assert their leadership. Let's take a look at Qs as well while we're at it. The Qs represent the 100 largest non-financial companies. And you can see that Qs is lagging the New York composite that we showed, and it's lagging the S&P 600 small cap index that we showed. And so therefore, when you're looking at Nasdaq stocks, don't ignore the financial companies like the banks. There are lots of tiny little banks that are in the Nasdaq composite. Those have been doing well. And I'll just throw out one more ticker, and we'll leave it at that. And that's KRE. This is a regional bank index, and you can see that this will probably include stock companies and stocks that are on the Nasdaq as well as on the New York Stock Exchange, and that one's had a nice breakout past 70.
Hmm. Yeah, looking pretty good here at the top of that buy zone, Dave. Let's wrap this up by looking at GLD, the gold sector ETF. We saw some perhaps climatic action here. It pulled back sharply to break the 21-day line. Seems to have found its footing here a little bit. So, talk to me about what's going on with gold.
Very nice rebound so far here, Lexi. I think if it were a bigger test of the precious metals, you would have seen GLD and its silver and the silver proxy SLV maybe touch and test the 50-day moving average, and that's what happened with silver. But this is the kind of rebound you would expect for something that's strong and making a pullback. Now, this pullback is very unusual. I mean, it was very, very sharp and very, very steep and fast. But for now, it seems like investors still want to have a hedge against uncertainty over a variety of issues, as well as the fact that if in I think gold, doesn't have any real usefulness outside the jewelry part of manufacturing. Is seen as just a safe haven, and people have treasured it for millennia. So that's why it has value in someone's portfolio. And as I've said, I think on this show and other places before too, gold has had a nice run, not simply because central banks around the world might be accumulating it, but also because if interest rates go lower and inflation stays closer to 3% versus 2%, that real return, that post inflation return on bonds gets shrunk. And therefore, institutions in general like to hedge by using something like gold.
Yeah, and how much of this is related, Dave? We've seen Bitcoin really plummet here over the last month or so. How much of that is related to what we're seeing with gold?
That's an excellent question. A lot of people like to ask, and I've wondered too whether there's some kind of relationship, like a negative correlation, right, between strong gold and weak Bitcoin, strong Bitcoin, weak gold. I don't have a definite answer to that, but you would reasonably guess that profit taking in something like Bitcoin produces some cash that wants to find a home, and perhaps there has been some flow going away from Bitcoin and into these precious metals. But keep in mind that gold and like a lot of commodities as well as bonds and equities, these are huge reservoirs of capital, and so it's not as easy, in my opinion, to just say there's always a direct causal relationship between the two. I would just treat both as, in general, just separate markets. And maybe those people who sold Bitcoin, maybe they're waiting for another opportunity to hop back in. Are they going to be all of a sudden gold bugs? Really, really hard to know.
Yeah, thanks for that commentary there. Let's go ahead and look at some individual stocks. We can start with AEIS, that's Advanced Energy Industries, up over 2% today. Dave, so thoughts here?
Yes, well, I was thinking about the Seahawks defense, how they were suffocating the Patriots for most of the game on Sunday, and we know that defense wins games. Good defense wins in the stock market too. And what do I mean by that? Well, you can see on that market surge daily chart, you have a lime green or a mint green strip highlighting where the stock has achieved a 20% to 25% profit from that recent cup with handle breakout at 224.37. And certainly that breakout was rocky. Initially shook people out and fell, briefly below the 50-day, but then righted itself and had a second re-breakout, and it's been really great. On the other hand, we have earnings coming up, and you just never know what could happen on earnings. This is a great company in terms of the fundamentals, Denver-based company that has energy power conversion products for a variety of industries, from manufacturing to medical to data center to chip equipment and whatnot. And you can tell by the fundamentals that it is a very dynamic, very impressive company in terms of the fundamentals. Bottom line, top line growth is just really, really excellent. And the estimates looking forward are also very, very strong, as you highlighted there, 28% earnings per share estimates coming up. But we do have earnings coming up, and you can see that in the prior report, if you go to exactly in November 4th, it had a big up day, but then it slid alongside with the market and gave up all those gains. And so what I'm trying to say here is that don't be afraid also to defend your profits in a stock such as AEIS. It could go up another 20-25% here, or even further. That's definitely possible given the sort of personality of the stock. But I just want people to remember that defending your profits, taking at least partial gains on the way up in the stock, is also really a really good rule to have in terms of portfolio management. Let me also highlight that according to its Q3 report, they gave an outlook for earnings of $1.75 for this latest quarter that's going to be reported upon tomorrow after the close, I believe, and $1.75 plus or minus 25 cents. So if they come down 25 cents below, that would really reflect deceleration and could lead to a disappointing reaction. If they report 25 cents above that midpoint of $1.75, it might encourage more buying in the stock too, because it would maintain that really strong double-digit earnings growth. Also, the outlook for revenue is at 470 million plus or minus 20 million. If you don't mind scrolling down to the bottom there, you can see that the market surge consensus estimate there is 470.2 million. I'm a little concerned about whether growth can continue to go at a clip that it's shown in the past, in that mid 20s, low to mid 20s. It looks like growth could slow down a little bit, but we'll get definitely some more detail tomorrow.
All right, Dave. Well, thank you so much for that. So, perhaps thinking about taking some potential profits here. I guess you can always buy back the stock. That's always an option.
Right.
Uh, let's go ahead and move on to HEI. That's Heico in the aerospace defense sector. This one reversing lower today, Dave, down about 1.3% and falling again even more below the 50-day line.
Yeah, I don't think this is a stock that you can buy right now, but I wanted to highlight the stock based on some research done by a longtime veteran growth stock investor and fund manager, Louis Navalier. Recently had a nice conversation with him. He wrote a book called The Sacred Truths of Investing. And what I liked about that book was to talk about finding stocks that can rise 100,000%, which would be a pretty amazing return on any stock that you can get. 100,000, right? 100,000% is just incredible. That's 100-fold gain, 100 bagger, if you will. And to appreciate HEI, you'd have to go through the monthly chart and then zoom out a little bit. Maybe you don't have to even zoom out, but maybe, yeah, there you go. If you look at Heico, the stock had traded below $3 a share back in the early 2000s, but it was breaking out. Now this isn't this is a split adjusted chart. I would assume that there were some splits along the way, but you can see that this is a stock that had the potential. Um, I mean, it proved that some stocks have the potential to make such a big gain and join that so-called 100,000% club. Well, today this company is now a large cap, but a long, long time ago it was a micro cap. It was a small company. If it was 44 billion, right, then yeah, it was a company with a market value of under a billion. So definitely you want to be looking for companies that have that durable earnings and sales growth in an industry that might undergo a lot of positive change. There's no doubt that aerospace is constantly evolving and changing. We're looking into the growth of space exploration. There's a lot of small companies and mid-cap companies that are exciting right now in the market. But I just wanted to highlight Heico as one good example of that. There is proof that equities can deliver you over a long period of time for a very patient long-term investor an incredible return. Now let's go back to the daily chart and then zoom back in. The final point I want to make about Heico is that when you have a company like this, it doesn't mean that every single breakout to new highs is going to work out. And so to me, what I see is a stock that's not ready yet to maybe make a new move. But if you've owned a stock like this and you see a pullback down to the 200-day moving average, if it holds around that 200-day moving average and then starts to rally again, that could be your sign to either hold on to the shares you have in something like Heico, or even maybe possibly initiate a position.
All right. Well, we'll be watching that. I think right now that is coinciding with the 313 level there. Let's go ahead and wrap this up with a look at Ubiquiti, Dave. That's ticker UI. Nice gain today, up about 14.5%. Again, following a strong gain of 8% on Friday. Looks like, again, breaking above this kind of 600 level here. Looks like it's maybe uh, going vertical, Dave?
The last couple of days, yeah. I mean, we wouldn't say this is a vertical move yet because it's still in a base.
Mhm.
And you can see 3 months ago, it had a negative reaction to earnings, even though the earnings were pretty solid, for Q3, 62% EPS growth and very, very nice increase of 33% on the revenue. Now it's going the opposite direction. It's going bullishly up on another really great report. So this is a company that I used to trade a long time ago, and I haven't touched this in a long time, but I'm very interested now, especially given that telecom infrastructure was one of the best industry groups today. If you don't mind clicking on telecom infrastructure at the top left, yeah, you can see that uh, not sure what happened at the very end there, but you can see that the last couple days or last 3 days, it's had a very impressive move. And DY is a stock that we've talked about on IBD Live, and they do a lot of the heavy digging and construction for fiber optic networks and above ground data networking too. So a lot of interesting stuff going on here. I would suggest that going back to Ubiquiti UI, given that they have expertise, I think in a variety of networking technology. Check out what was so bullish about the report beyond those really strong earnings and sales.
So with this one, Dave, after kind of jumping above some of these short-term levels here, it looks like maybe a little bit extended from the moving averages. What would you be looking at to set up potentially next with Ubiquiti?
There are a couple scenarios. One is it gets closer to 800, cools off a little bit, has a few down days, a few quiet days, volume dries up, and that would be a possibly good handle in which the handle forms just underneath the left side high of 803.60. It might not do that either. We generally look for handles to form over at least 5 trading days or a week on a weekly chart. If it doesn't do that, well, the cup without a handle breakout would mean that you would be buying around 803. Keep in mind though too that sometimes you got a breakout and then it turns out to be a fake out. Shakes people out and then tries to break out again past 800, and so all those scenarios are definitely on the table, and you just have to be flexible and nimble when it comes to trading a stock that can move as quickly as Ubiquiti.
All right, Dave. Well, thank you so much for your insights today. We really appreciate it.
Thanks for having me, and I hope people don't think I'm trying to take over Justin's spot on Mondays or something.
We're calling this the final countdown week. We do expect Ali to be back next week. So thanks to everyone in there for hanging in with us. But yeah, glad to have you on here as always.
Thanks.
All right, well, that wraps it up for us today. We'll be back with more market analysis starting tomorrow morning with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll be back here tomorrow after the close. I think it'll be Ken and Ed. So tune in tomorrow for that. We'll see you all next time.